what the heck's mortgage insurance? Does that mean if my home burns down that the mortgage insurance kicks in and pays for the cost to rebuild the house? No. What mortgage insurance is a premium that is paid by you as the borrower. If you have a higher loan to value, you're putting less money down, you're allowed to do that, but it's risk-based. There's higher risk that if you walked from that house and the market had declined, there could potentially be a deficit owed on that. So the mortgage insurance would pay for that deficit to the lender. So it's a premium that you pay to have a higher loan to value. Now, if you have 20% down or more, mortgage insurance is not required. All it's doing is helping increase your buying power with putting less money down, and then it's a mortgage insurance premium that kicks in and helps mitigate that higher risk. When you pay that premium, am I obligated to pay that for the 30-year duration of the loan? In some mortgages, you are, and you need to make sure you find this out up front. In some mortgages, it will drop off. And some mortgages, you can pay a lump sum up front, or you can have it lender paid with a higher rate, and then you don't have the monthly. So there's a lot of options with mortgage insurance, and you want to make sure you find those things out. And it is also risk-based. So the better your credit is, the lower your mortgage insurance potentially could be. And so you want to make sure that you maintain and keep good credit, because your mortgage insurance is going to be cheaper potentially under those circumstances. But again, you'll want to ask your mortgage professional about the terms of that mortgage insurance. Now there's one other type of insurance which is your fire or hazard insurance. That's required on a mortgage as well. You would want it on your home regardless whether you owned it free and clear or you had a mortgage. But if there was damage, water damage or fire or whatever, that kicks in and helps with the cost of that. The other monthly fee that you could have or will have with your mortgage payment, or you can opt to have that collected, is your real estate taxes. And that's your city, county, state, and governmental taxes on the home. And they will collect and pay that for you through your monthly payment. There's one other thing that you could have that you're responsible to pay on a monthly basis, is if you buy in a condo or a townhome project, or what they call a PUD, a planned unit development, where they have snow removal, the roads are private, so they're responsible for that. You have a monthly fee for, they call it HOA or homeowners association dues, and those can run anywhere to any amount. And you'd have to look into what those are, but they're called HOA dues. So there's potentially 4 different things. You have your mortgage insurance, you have your insurance, you have your taxes, and you could have an HOA fee if you're in a planned unit development.